first. I'm sharing my screen. Okay, before moving to the today's session, anyone is having any doubt in the yesterday's topic? Any question, any queries? I have uploaded the lecture on the Google Classroom. I hope everyone has received the link. Those who have not received the link, you can send me a hi message on the WhatsApp for the Google Classroom link. Okay, there I will be uploading today some of the material, like whatever we have done today. Till that much, I'll put the material as well, so you can refer it along with the session. Okay, so yesterday we have done what is the filing requirement, who must file the return, right? Two of the people who are required to file the return is what, whose standard deduction is going above the base amount. Okay, now here I have put the base amount as well in the book, and the additional standard deduction amount as well. That has been changed to 1850 and 1500. Okay, depending on the filing status. Then what will be the tax rate according to your slab rates? Okay, if your marginal, like if your income, taxable income is over 11,000, then your tax rate will be 12%, and this will be doubled. The slab rates will be doubled in case of a MFJ filers. Okay, no need to remember this. This is just for your reference. Then we have is when to file. Okay, one more thing. In this book, we are going to highlight all the amendments with the green highlighter. Okay, so whenever you receive the book, all the things in which is amended will be in the green highlight. So make sure to focus on that properly. Those who have already completed the one-time reading in 2022 tax law, for them, you can just go through this green highlights quickly. Okay. Then we saw about when to file the return and the extended due date. 15th April and extended due date will be 6 months from the date of the filing the return. Right, then these are some of the forms. We will have an overview of 1040 form as well once we complete the first chapter. Right, filing status. Yeah, this was the topic which we started yesterday. Single filing status we completed with the joint MFJ. Okay, MFJ filer, and then we completed with the MFS. Now there were few things which I need to explain you along with the MFJ only, that is injured spouse and innocent spouse relief. Okay, just a minute, let me download this. Okay, just give me a minute. I'll download it so that I can make the edits in that. Okay, no worries. I'm not able to download it right now. Let's continue from that only. Then I'll take the other. Okay. See, in case of in case of injured spouse and in case of innocent spouse, there will be some of the questions in the exam. See, if a person is filing a MFJ return, then what will happen? Think it practically. Okay, a husband and a wife both are not working. Only one person is working. Only husband is a working person, but the wife, since she is filing the return with him, she will also get the share, 50% share of refunds, right? So husband will say, that is not fair. I want my whole refund to be applied on my income only. So that is why this two concept will come in picture. What do you mean by injured spouse? When one joint return is filed and only one spouse owes past due amount. Just like a refund, take a vice versa case. Husband is only working, he is only earning, he is only liable to pay the taxes, right? Before marrying, if if the husband is already having some past dues to pay to the IRS, okay, let's say he made some mistakes in the past return when he was not married to the person, he might have made some mistakes. Now, when he receives the notice from the IRS, since they both are filing joint return, why they both should be liable for that amount, right? So the spouse will say, I am injured spouse in this case, and I won't be liable. I should not be made liable for this amount, for this past due amount, which was wholly and solely earned, and wholly and solely the return was filed by the taxpayer previously. Got it, guys? There is very minute difference between injured spouse and innocent spouse. Injured spouse is regarding if one spouse is making any mistake, okay, and other spouse is by default made liable. So why he or she should pay the penalty or interest or anything, right? Got it, guys? So when a joint return is filed, and okay, you can read this one. When a joint return is filed and only one spouse owes a past due amount, the other spouse can be considered as a injured spouse. Okay. Now the injured spouse can get the refund of his or her share if both are paying together the extra, taxes to the IRS. As I mentioned, only husband is working, wife is not working anything. She is not earning anything. So why she should pay the tax for the share of income of the husband? Got it, guys? But when she can apply for the injured spouse relief, when three conditions are satisfied. First one is if she and the and her husband, okay, both are filing a joint tax return. They have reported income such as wages, interest, dividend, tips, commission, okay, earned plus unearned. Whatever we have seen yesterday, earned plus unearned income, okay, this all should be reported. Wages, interest, dividend, state, like not all, at least the refund should be somewhere from this only, okay, from the gross income. Then we have is the third qualification is simple, have made a reported tax payment. Actually, the payment should be done, right, to get the refund. Clear, guys? Any question till now? Injured spouse is clear for everyone. So I can move to the innocent spouse. If you're not clear with an injured spouse, innocent spouse relief, you will have a confusion in that when I explain it. See, both the spouse are responsible for paying the full amount of tax, interest, penalties which are due on the joint return. This is something, injured spouse is something where a person makes a previous mistake, why both should be liable. And this is regarding the current year return. Yeah. Let me first explain the innocent, then I'll compare both. Okay, you will understand that thing. In case of innocent spouse relief, what will happen? Both the spouse are normally responsible for the tax, for the penalties. If they are filing a joint return, they both will be liable to pay the tax equally. Okay, but if qualified for if qualified for innocent spouse relief, taxpayer may be relieved of part or all the joint liability. Okay, if a person is qualified for what? Innocent spouse relief, they will be relieved from the part of all joint liability. Okay, taking the same example, husband is working, wife is not working, not earning at all anything, no wages, no interest, no income she is having, but she is just filing a joint return with her husband. Okay, so the taxpayer actually who is earning is only liable to pay the tax. If he is not paying the tax, he should only be made liable for interest, penalties, and everything. Okay, both the person should not be made liable because of only one person's income. That is innocent spouse relief. There is very minute difference. Injured spouse means for any previous past due amount, if you're going to have, okay, if you have to pay to the IRS any past due amount, the spouse should not be made liable, because at that time you might have not been married, and that income on which the notice has been received by the IRS was earned by the taxpayer wholly and solely. The other person, the wife, should not be made liable for that. Okay, so same qualifying event is there in case of innocent spouse also. That is understatement of tax because the spouse omitted the income. Okay, the person who was earning actually forgot to add the income in the return, or has done some false claim for deductions or credits. Okay, and the innocent spouse, the other person is not aware about this kind of understatement. Got it, guys? So this is how the person can claim for innocent spouse relief. Clear, guys? Any question till now? And if a person is divorced and they are not living together, they usually use the innocent spouse relief option, because an understatement of tax and innocent taxpayer is divorced or otherwise no longer living with the spouse. In those situations, maximum time innocent spouse relief is used. If people are still living together, see here, no need to file a joint return in innocent spouse relief. If they are divorced, they are living separately, they are filing a separate return, they can go for innocent spouse relief. Okay, in this case, injured spouse, they are still right now filing a joint return, they are reporting all their incomes together, then they can opt for a injured spouse relief. Clear, guys? And the last point in case of injured spouse is what? Not be required to pay any past due amount once you are been qualified for injured spouse, and you have to file 8379 form. Yesterday I mentioned, everyone please mute yourself. Yeah, yesterday what I mentioned actually was, make sure to write down the form numbers on the last page of your book. So yesterday we saw the extension form. Today, for filing the injured spouse relief, you have the form number 8379. Okay, you can just write it down on the last page of the book. So Mohit has asked, innocent spouse is for assessment year, understatement, or mistake. Yeah, innocent spouse is for previous mistakes. Okay, and injured spouse is for previous mistakes, and innocent spouse is for current year mistakes. After being married, if you're making any mistakes, usually both the people will be liable equally. Okay, but the spouse who is actually not aware about the mistakes or this kind of understatement, she can apply for innocent spouse relief. Okay, or if both are divorced, see here the word or is used. Here includes a point is given as understatement of tax because the spouse omitted the income. Second is given understatement of tax where they both are divorced and they do not live together. Or along with this, there's one more option. Given all facts and circumstances, it is not fair to behold the innocent taxpayer liable for the tax. Okay. If you look the practical situation, the wife is not earning at all. From where she will pay the penalty and interest, right? She can't pay penalty, interest, kind of expenses from out of her pocket. So that is why she will simply apply for innocent spouse relief. Okay. Related types of relief includes separation of liability. Now in exam, they can also use this kind of word against innocent spouse relief. What are those other wordings? Separation of liability relief, equitable relief, relief from liability arising from community property law. Okay, when the people are going to get division in the community property, yesterday I explained what is community property. All your asset, all your income will be divided 50-50 if you're filing separate return. Okay, in that topic we did that community property law, where all the incomes, all the assets will be divided 50-50. Okay, now, yes, Mohit, they can't file MFJ. That's why there is no condition given over here for filing MFJ. Let's say if they are filing separate return, and if some notice is coming, okay, the spouse can straight away say that I am not liable for this, okay, because I am not earning that income. So she can opt for innocent. But for injured spouse, separate return is not compulsory. Only you have to file a MFJ, then only you can go for injured spouse. Okay. So why both cases can be used by the spouse if she is not earning. Being married, filing a joint return, she can go for injured spouse. If she is married or they are not living together, or they are divorced, but still there is some liability notice which is coming to her also, she can go for innocent spouse relief. Okay. See, related type of relief are all this community property law, in that if there is a divorce and both the people are going to receive 50-50% of the asset and this income and everything, so she will have to pay the tax on the 50% income, right? At that time she can opt for innocent spouse relief and say that this income was not earned by me. Okay, but since it's a community property law, I'm getting the 50%. I don't have the liability to pay the tax. It was not earned by me. Okay, she can go for innocent spouse relief. Clear, guys? Actually, I've made some additions in our previous session. I will share this whole thing in the Google Classroom. Whatever theory we have done yesterday, just go through it once from this. Okay, I'm trying to include each and everything like from 360 angle in the book. I don't want you guys to do it in a very short manner, because along with this regular book, you will also receive the summary book. So that is enough to revise. That's why in regular book, I'm trying to include everything. I will try to include the MCQs also. But let's see how we can include it. It will be a very around 300 plus pages of only one part book. That's why I'm not including the MCQs in this. Okay. MFS we have seen yesterday. Okay, these 3 points were there. If you're filing a separate return, you need to take either standard deduction or itemized deduction. Both things can't be taken by both the spouse. Coming to the qualifying surviving spouse, here the word actually it is qualifying surviving spouse. This thing we have done yesterday, and we have solved a little bit a small example. From the year of death, for next 2 years, you can go for qualifying surviving spouse. Okay, and for this status, you should have, the taxpayer should have, the widow should have one child who should be living with the spouse for whole year. Mark my words, whole year. Which I'm not able to write down over here. Okay, just give me a minute. I can download it from my system. So, in that case, in case of qualifying surviving spouse, what was the situation? You should be the child. You should have the child for a whole year. Then only you can go for qualifying surviving spouse. Okay. And what were the kind of expenses, guys? Only and only household maintenance expenses. That much expenses can be claimed by the that much expenses should be paid by the spouse or by the taxpayer, whoever is going to claim that child. Okay, clear, guys? Any question in qualifying surviving spouse, because it will have a little bit link with the HOH status. Anyone? Okay, just a minute, guys. It has been downloaded now. Just give me a minute. Actually, today's link was this expired. I have to extend the today's link also to tomorrow, so that the 3-day demo link will be same. After 3 days, the link will change. Those who will enroll, for them, you will be added in a group. You will receive the link in that group only. Okay, just a minute. Okay. It is not coming. Okay, is there? Let me share my screen again. Okay. Are you able to see the screen, guys? Yes or no?
Yeah, we were able to see.
Okay. Okay. I was not able to see the chat box. All right. Coming back to our topic, now I can easily, write it and explain it. Yeah. In case of HOH, now what will happen? Just remember, for QSS and HOH, there is only one simple difference. For QSS, you should have a qualifying child who should live with you for the whole year. Okay. For HOH, head of household, you should be having a qualifying child or qualifying relative can also work, who should be living with you for half of the year. Okay, now we understood the difference between QSS and HOH. Maximum questions will be based on QSS and HOH status in exam also. Okay, there will be very minute difference and you will get confused between two options. Either it should be QSS or either it should be head of household. Okay, so head of household status entitles certain taxpayer to pay lower taxes. Just like in QSS, you have the same slab rate as that of MFJ filer. For HOH, the slab rates are also less, but not as much as MFJ, but that are less slab rates. Okay, so let's see, for HOH, it is 2800. For QSS, it is 27,700. Okay, and for the blind and 65 years of age, The additional deduction is also the same. Okay, so don't worry about the limits and everything. If you can remember, that's good enough. If you can't remember, that's fine. For exam purpose, they are not going to ask you any limits, right? For qualifying for this status, what all criteria you should met? First one is you should be unmarried. So in QSS, the person is widower. In HOH, the person should be unmarried or legally divorced. Okay, even if the person is legally separated, or if a person is married but living apart from last 6 months of the year. Okay, for that particular taxable year, check the last 6 months of the year whether they are living apart or living together. If they are living apart, if they are married, they have the option to select the HOH. Only one person can select who is having a qualifying child or a qualifying relative living with them for half of the year. Okay, clear, guys? And the individual should not be a QSS. If you are eligible for QSS, you can't go for HOH until 2 years. After 2 years, yes, obviously you can shift to HOH status. The individual should not be a non-resident. The resident and citizen can only go for the HOH status. And individual should maintain his or her household, okay, for more than half of the tax year. Half of the tax year. Again, the word uses household, means all the household related expenses. What that will cover? Mortgage interest, rent, okay, clothing, food, all this thing which is consumed in house will be covered as a household maintenance expense. For support test, we will see that when we do the qualifying child, qualifying relative topic, at that time we will understand. For support test, this mortgage interest, rental expense, these are not considered into picture. Okay, for the purpose of this definition will keep on changing depending on different topic. For the purpose of HOH status, okay, the definition of a qualifying child is the child can be your own stepchild, legally adopted, foster child can also work. Do you remember in QSS status, foster child was not there in the picture, right? Child, stepchild, legally separated is fine, but one person should at least be the biological parent of that child. Brother, sister were not allowed over there. Okay, here brother, sister, descendant of one of those. Okay, descendant means what? Father, father's descendant will be what? Child, grandchild. Okay, father's ascendant will be what? Father's father or grandfather. Okay, I hope the meaning is clear for ascendant and descendant. These two words will be used a lot of time in our upcoming chapters. Okay, after this credit chapters is going to start. So in that also, you have to remember who is doing expense for whom, who can be dependent, who can be qualifying child and everything. Okay, so child, stepchild, legally adopted, foster child, brother, sister, descendant of one of these. Okay, descendant of either brother or sister who meets the definition of dependent under a qualifying child rules. So what are the what are the rules for being a qualifying child? Here we will see the rules. Let's do that first. There has to be a relationship, there has to be a residence, the age test, and the support test. Okay, these are the 4 criteria you can remember properly. What is the relationship test? The person, the child should be related to any of the taxpayer for whom you are going to claim the qualifying child. Okay, so taxpayer's child, stepchild, foster child, sibling, or a step sibling, or a descendant of one of them, they fall into some relation. Then only you can go for a qualifying child status. Let's say my friend is there. Okay, friend is not my relative, so they can't fulfill the relationship test. Next test is residence. The residence for the taxpayer who is going to claim the child, and that qualifying child should be the same residence. And for how many days or how many months? It should be at least for half of the tax year. Okay. For this, the exception will apply if if a child is a child of a divorced or a separated parent, or a child is kidnapped or temporary absent due to medical reason, due to education reason. Okay. Or if a child is born and died in the same year, for them the residence test is exception. Okay. They will be called as they are living with the parent for the whole year. No need to check the residence test for this type of child. Okay. The age, now the age criteria is most important. The age must be of 19, under 19. Okay. It should be less than 19, less than 19 years. Now in exam they will twist you and they will give you exact 19 years. Mark the words, it is saying less than. Means even if a person is 19 years, even if the child is 19 years, is not fulfilling the age limit. It is specifically mentioning as under 19, means the child should be 18 or less. You can remember like this. Okay. Or if even if the person is of 19 years, there is one more criteria. Till the age of 24, you can claim him or her as a qualifying child. 18 years and 6 months, that is above 18. Okay. The birth date should be seen. The birth date, let's say for 2022 tax year, we are checking the filing status. We are seeing the qualifying child status. The child's birth date is on 6th of June, where he's turning 18 years. Okay. Now he is already 18 years in the month of June. We are filing the return for 22. So till 31st December, can I say he has already completed more 6 months after 18 years? Right? So we can still claim him as, we cannot claim him as a qualifying child. He will be falling under other category. We need to check, is he a full-time student? If he is a full-time student, okay, full time will be considered if you at least go for 5 months in the college. Okay. Full time will be considered even if at least 5 months during the year you go to the college, you will be eligible for qualifying child. Got it, Nagraj? Till 19 years you can claim that child. So still this person on 31st December can be claimed as a qualifying child. But let's say here it's 19 years. Now he has already completed 19 years, 6 more months has been passed. He cannot claim, we cannot claim as a qualifying child. If it's an 18 years plus 6 months has been passed, we can still claim him as a qualifying child because he has not yet completed the 19 years total. Okay. Yeah. So two conditions are there in age limit, less than 19. Don't remember the words 19 because there will be so many age limits in our whole part 1. When we'll do the credits chapter, when we'll do the IRA chapter, okay, there are so many age limits. Remember the age limit like 18 or less. Okay, it's a human mentality. If you remember 19, 19, 19, like in exam, you will short make the mistake. Always remember the exact age, that is 18 or less. So remember less than 18, 18 or less, like that you have to remember. Okay. Now support test did not provide more than half of his or her own support. Means the child, okay, might be having some expense. He is paying for his own education. He's paying for his insurance, medical expense, right? He should not incur his own expense. At least 50% should be provided by the parent. Or anyone else can also provide the 50% of the expense. Okay. So here also there will be some complex MCQ where you will get confused. Support test means the own expenses of the child will not be provided by him. Okay. This syllabus will remain till next year, February. Okay, we have started it very initially. You can easily complete this lectures within 45 days, revise it properly, appear for the MCQ till May or June. As soon as the window is open, you will be ready to appear for exam. Okay, so see, so for support test, always remember this 50% can be paid by anyone. It's not mentioned anywhere over here that only the parent should pay. Okay, wordings is important in our EA exams. So please read each and every line properly. Did not provide more than half of the his or her own support of the year. Means what they are saying, child should not provide the own support, means anyone else can provide it. Okay. If a child is claimed as a qualifying child by two or more taxpayer, let's say he or she is becoming a qualifying child of two or more taxpayer. So what we can do, we have to make it qualifying only for one taxpayer. Okay, child will be a qualifying child of the parent. If more than one taxpayer is the child's parent, the one with whom the child lived for longest time will be called as the person who can claim them as a qualifying child. If the time is equal, the parent with the highest AGI we will check. Okay. If no taxpayer is the child's parent, the taxpayer with the highest AGI will be considered. First option is the parent will be liable to claim the child. Let's say both are the parent. Okay. Mother and father both are divorced, but both are going to take the child as a qualifying child. So what we will do, we will check with whom the child spend the more time. Let's say both the child spend the equal time. Then we will check the next step is AGI. Whose AGI is highest? They will claim the child as a qualifying child. Clear, guys? So this is a rule for a qualifying child. In case of HOH, you have to check that qualifying child. Okay. If yes, you can claim him or her as a dependent. And if the person is a dependent, you can go for HOH status. Okay. Now, if the mother and father is also claimed as a dependent, you can go for HOH. But for that, the residence test is not there into picture. The half tax year, the father and mother should live with the taxpayer. This condition is waived off in case of mother and father. Okay, so the dependent parent is not required to live with the taxpayer, provided the taxpayer maintains a home. That was principal residence of the parent for the entire year. Right now, maintaining a home means here the meaning is actually given. You should be giving the expense for cost of upkeep. Upkeep means maintaining the home, the cleaning and maintenance services. Okay, for that you are going to pay. You are going to pay the rent, mortgage interest, property tax, insurance, utility, everything. Every expense which are related to home are your household expense. And maintaining the home expense is what we are going to check in the head of household. And also in QSS, we are going to check the maintaining the home expense concept. Okay, see here it is mentioned. Yeah, see here. Clear, guys? I hope there is no confusion in QSS and HH status. Yesterday I have uploaded MCQs on the Google Classroom. Please make sure to go through the theory. I'll upload the material also only for the topics today, what we have done. Okay, if parent and one child, we can take both the credits, which both, like for HOH and QSS, no, only one status can be taken. Both are not allowed, only one is taken. How you can file two returns? This is, we are seeing is a filing status. I'll show you tomorrow the 1040 form. There you'll understand. Filing status can be claimed only once. If you select QSS, you can't select HOH. QSS should be used for 2 years. Use it for 2 years if you're eligible, right? Don't go for HOH because in QSS you have the highest benefit. Okay. Next one is dependent relative. Now, as I mentioned, for HOH, we have dependent relative also. You can go for dependent relative this as a qualifying relative in your tax return. Then also you can go for HOH, but who can be your dependent relative? It has to be your relative only. It can't be your friend. It has to be your grandparent or brother, sister, aunt, uncle, nephew, and niece, as well as step parent. Parent-in-law can also work over here. In some scenarios, we will see in credits chapter or other chapters, parent-in-law, okay, sister-in-law, brother-in-law. This cannot come into the definition of relative. Okay, in some of the definitions, we will see that later on. But remember, for purpose of HOH, all your relatives will be called as a relative qualifying relative. Now, if relative is there, they should be living with you for whole 100% of the year. Got it, guys? Qualifying child, I'll just mention it over here. Qualifying child can live for half of the year. If they are qualifying relative, they should live for the 100% of the year. Okay. See, here it is mentioned, must live with the taxpayer. Other than father and mother. Father and mother has already been given an exception. No need to live with the child for whole year. But yeah, being this grandparent, brother, sister, aunt, uncle, you have to live for the whole year to call yourself as a qualifying relative. Okay. Note that cousins, foster parent, and unrelated dependents are not a qualifying person. Okay, so this is an exception. They will play around the exceptions only. Okay, do you remember in MCQs, if you have seen yesterday's MCQs, which of the following is not a qualifying relative, which of the following is not a qualifying child? Okay, yesterday the topic was remaining, but still I uploaded the MCQs in advance. You can just complete those MCQs today. Cousins, foster parent, and unrelated dependent. Unrelated dependent means what? Let's say we three people are living together. Out of that, one of the cousin is very far cousin, like he's not even closely related to me, okay, in any way. So he will be a unrelated dependent. He's not falling under any definition which is given over here. Okay, so cousins, foster parent, unrelated dependents will not qualify for a this qualifying relative topic. Okay, got it, guys? I hope HOH status is clear for everyone. All the filing status is clear for everyone, right? We still don't have. Yeah, tell me.
Yeah, on the HOH, I have a query. Like, is it at least a minimum half year or how it is? Like, it should be exactly half year to qualify HOH?
Yes, minimum.
Okay.
If cross the minimum eligibility, you will be eligible.
Because everywhere I could see like half year, then there comes a doubt like it should be exactly half year or at least half year.
No, it is at least. At
Oh,
least I add the word over here
yeah.
somewhere, at least. Okay, and remember, guys, as you enroll in the batch, you will get the updated summary by courier on the spot. You will get the PDF for this right now, because still the whole book is in printing process. I need to add some examples and make it a little bit easy for you guys. So on the very first day, you'll not receive this regular book. Yeah, you will receive the material in PDF on the same day. Let's say you'll see the demo for today's session only. Whatever we did today, I'll put the whole PDF of that topics in the Google Classroom. You can easily download and read it and make the notes. But for whole physical book, it will take at least 10 to 15 days. It is in printing process. And the whole quantity is huge. So they will take at least 15 to 20 days. That's why. Okay. So remember this thing. For filing status, we have completed. Any doubt, anyone?
Madam,
You
one
guys,
doubt.
yeah, tell me.
Here, like definition like QC and QR are there for the HOH status, right? So
Hmm.
if the family is the taxpayer is like is going for HOH, we can go for like QC and QR, both the options.
No. For HOH, yeah, you can claim qualifying relative, qualifying child, both the dependent you can claim. Okay, that is not an issue. The thing is, at least you should have one of these two to claim a HOH. We are just looking the eligibility criteria. Okay, if you have both, that's good. You can take both of them as a dependent. We'll see tomorrow the 1040 form. Okay, I'll show you tomorrow only. There is a whole column in the 1040 form where you can add n number of relatives, n number of dependents on your tax return. Okay, yeah. Any other doubts, guys? Anyone?
Yeah, one more query. Like the 1040 will be always like April 15 filing, right?
Yeah.
But when we discussed about that under 19, you mentioned like as of 31st December. So we'll be checking like 31st December or during the filing time, like before April 15, is he crossed 19 or not, like that?
No. 31st December only you have to check. Because
Okay.
you will get a credit for this whole year. Like we'll see in the credit chapter, from 1st Jan to 31st December, you are going to claim the credit. Okay?
Okay, you said it in the first class. Yeah.
Yes.
I remember now. Thank you. Thank you.
Any other guys, you can ask the doubts. Demo is not like you can't ask the doubts. You can mention your doubts, queries. And see, my target is just like that. You should understand each and every concept in from 360 angle. Nothing should be missed, because prepare for the worst when you are appearing for the MCQs. Okay, MCQ, we don't have any subjective exam. It's a whole MCQ based. No one can say from how the questions will be twisted, right? uh, okay, then I'll end today's session. Tomorrow we'll have one more lecture where I'll complete the remaining topics. Okay, there are some additional rules, qualifying relative and dependence. There is a small table to remember. Means easy way to remember, like how you can go for qualifying child and qualifying relative. Okay, and yeah, multiple support arrangement is there. So only this much is there for the first chapter, then credits chapter will start. So tomorrow we'll complete the first chapter. Today I'll upload this recording in the Google Classroom. Those who have not received the recording, please send me a hi on the WhatsApp. I'll forward you the recordings, okay, of all the 3 sessions. 8160202597, yeah. But not able to open it. Don't try to open it from the mobile phone. The lectures are in a non-downloadable form. All the lectures of our class will be non-downloadable form. So you can open it in this PC, in the system, with a good internet. Okay, the internet is not good, they will ask you to download the file. Else, if you're not able to see it, wait for 2-3 days. Wait for tomorrow only. I'll upload everything on the YouTube only. You can go through YouTube channel also. Okay, so YouTube channel, I hope everyone knows. Most of them are from the YouTube reference. Your EA Guide is the name of the channel. All these summary lectures will also be freely posted over there. Okay, even after completing all the lectures from our institute or from other institute, you can go to the summary lectures. Just you need to buy the summary book along with that to refer it. Okay, so that's it for the day, guys. Thank you so much. Have a good day. We'll tomorrow meet again at 7:30. And the link will be same. Yes, I have saved this same link will be there. There will be a 5-6 minute, a delay in starting the session, but make sure to join the same link. Okay. Thank you, guys. Bye. Have a good day.